Hello, investors. It's Don Vandenbord, Chief Investment Officer with Revere Asset Management. Today is Wednesday, April 10th, 4:30 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with the Revere Roundup Daily Market Insight video. State of the market, we're in a short-term pullback. You can see over here on the trend gauge, things got slightly worse today. Market leadership flagged as neutral. Short-term trend also flagged as neutral, but the red sub-arrow made its first appearance here as all five of the major indexes had at least one close below their 21-day moving average today. That's not the direction we want to see things going. Additionally, the medium-term 50-day moving average, we got the Dow and small caps piercing that level. So the yellow sub arrow came out there. All five of the major indexes still trending above their long-term 200-day moving average. It's important to note that market never gets into serious trouble until the indexes break below the 200-day moving average. Typically, if you're going to have a pullback to the 200-day, it's generally a 10 to 12% pullback, which is normal. Doesn't feel good, but it's somewhat normal. We try to avoid them, but we definitely get out of the way when we break the 200-day moving average. If we had any exposure left at that point, that's where the danger lurks for big hits to the portfolio. So what happened today? CPI came out before the open and continuing a string of disappointing economic data. Both the core and the headline on month over month and year over year were 0.1% hotter than were expected, and the markets gapped down in a big way on that. Didn't really have much further move to the downside. Couple of attempted rallies intraday failed. Mid caps and small caps and value stocks hit the worst. A bit surprising, but it had been growth stocks that had been underperforming over the last few weeks. So value catching up there today. In fact, looking at my screen, I've got a list of about 50 leading names here, and it's about split down the middle between green and red. So certainly pockets of strength showing up today. Here are the final numbers. The Big Seven actually positive on the day. NVIDIA up 2%. It had been lagging lately, but bounced at the 10-week moving average. Apple, the worst, only down 1.1%. So net on average up 0.1%. Remember, our Big Seven includes Netflix, not Tesla. Tesla had been acting well over the last couple of days, but was down 2.9% today. The RG8, this is not good stuff, down 1.81%. However, the FFTY, that's the IBD 50 ETF, which had been lagging also, down only 0.45%. So that was the best performing of the 8 growth ETFs that we track in this composite. S&P 500 opened down 1.1%. Late morning rally was thwarted, ended up down 0.95%, but breadth was really bad. Equal weighted down 1.7%. NASDAQ 100 down 0.9, equal weighted down 1.6. The Dow down 1.1, mid caps down 2%, Russell 2000 small caps down 2.5%, was down 3% at one point. Global 60/40 down 1.02% as that hot CPI spiked bond yields, meaning bond prices coming under pressure. In-house GROTECTION relatively mild, down 0.45%, considering the numbers of all of these indexes that we showed here. We'll take that today. We'll take outperformance on any day. So let's get to the charts. We'll start off with the S&P 500 here, and you can see very clearly breaking below the 21-day moving average, closing below it, and the slope of the line is just barely rolling over. Any rally on the S&P 500, we want to see how it reacts when it gets up into that 21-day moving average, which is, as I said, flat, now slightly rolling over. That'll be pretty important to watch at that level. NASDAQ 100. This is what happens when you flatline and then can't sustain a move back above the 21. The 21 rolled over here as well, and we're sitting on the 50-day moving average on the NASDAQ 100. Dow Jones Industrial Average clear break of the 50-day moving average. So you can see here with the rolled over 21, the prior 3 days, unable to get back above it, as once the slope of that rolls over, you best be cautious, unable to get back above it, and then clearly breaking below the lows of the prior 4 sessions. On the Dow today, mid caps had been holding up. Ugly day today, clearly breaking the 21-day moving average. Small caps as well, not only breaking back below the 21, but also breaking below the 50-day moving average. Not good move there. The VIX elevated, as you might guess, with the move down, but still below that 16 level, closing at 1580, up 5.5%. Let's flip to the dollar. Strength in the dollar certainly does not help the indexes overall. You can see that big move up here. So, which when we failed last week at the top of this range, that emboldened stocks a little bit, but a big move up almost 1% today in the dollar. That is not what we want to see, not what a bull wants to see. Let's check the precious metals. Gold pulling back mildly, down about 1% after being really on a rocket to the upside. Silver down 1%, same situation there. And gold stocks down 1.5%, but bouncing at the 8-day moving average. Bitcoin down early, but rallied. So undercut and reclaim of the 21-day moving average there. Bitcoin up 1.6% on the day. I'm showing BITO. I need to get used to showing IBIT, which was what we actually own. That bounced at the 21-day moving average. BITO is futures based, and it's a mix of two contracts, and that's why it gets out of whack with the spot price. That's actually why the bankers were so happy to get these spot Bitcoin ETFs approved. On to bonds. Big move up in yields, big break to the downside in prices. There's the broad bond index down 1.2%. TLT, the long bond, also clearing recent lows, down 2.2%. We're going to see a breakout here of the 30-year. As you can see there, up 2.3%, and the 10-year as well, breaking above that 43.50-ish level. Very clear breakout. So what happens next? Well, we got PPI tomorrow, and that will that's producer price index. Today was consumer price index. We'll see what the number is there, and what the reaction is as well. So that's our inter-asset correlation charts. Let's go to the tail of the tape. In addition to the hotter CPI, we had a very weak 10-year bond auction today at 1 o'clock, and rates pumped higher on that, and we saw a pickup in volatility and a break to lows of the day in the indexes after that happened. Day count, 1 day down, back below the 8 EMA, slope has rolled over, back below 1 day below the 21 EMA, and the slope has rolled over. That's for the S&P 500. Expectations neutral at best now, with us below both the 21-day moving average on the S&P and the NASDAQ 100. As far as sector goes to the upside, oils, Bitcoin, and unfortunately the dollar and yields to the downside. 10 out of 11 sectors, only energy positive. But really hit hard were builders, they're interest rate sensitive, retail, regional banks, biotech, and utilities and real estate. A couple of minor trims to the portfolio. The net that we bought yesterday broke back below that stacked up moving averages, so we quickly cut that. And MU, we sold half of that, as the last 2 buys that we had on that were slightly underwater. When you're swimming upstream, take a look at whatever's red, and 9 times out of 10, we're going to cut it. Bottom line, big gap down on hot CPI. Value in mid and small caps hit the worst, but leaders mixed. So there were some pockets of leadership today, and some stocks that were supported at moving averages. Let's go through the portfolio. First, Dell. Nothing wrong there, closing right below the 8-day moving average, holding on to that 120 level as support. This is in order of smallest to largest. CrowdStrike closed positive on the day, so possible shakeout below the recent lows. They're still trending below its moving averages. However, we're down to just a partial eighth size position on this. Net we stopped out of, can re-enter it if it regains strength, but not today. Expecting the move higher, didn't get it, but really it was the market holding it back. FCX continues to act well, bounced at the 8-day moving average, just down 0.7% today. Eli Lilly undercut and reclaimed the 50-day moving average, but is now 2 closes below the 21. Uber, not a good day today, but down 1%, closed mid-range and didn't break yesterday's lows. If you see something that didn't break yesterday's lows, that's a plus for it. Micron bounced at the 120 level. As I said, we did trim the last 2 buys of that were underwater, and Nvidia was strong today with its bounce off the 10-week moving average. It didn't get to the 50, but if you look at the weekly here, you can see it undercut, then bounced right at that 10-week moving average. Why are the 10-week and the 50-day out of sync? Important to keep them both up if you're looking at charts, because the 10-week is just the last 10 closes, and typically in a bull market, you're closing at the high end of the range on the day. So you're dividing those high weekly closes by 10, and that's what brings the 10-week moving average up higher than the 50-day moving average. So right now, Nvidia, the 50-day is at 813.28. If you go to the weekly, the 10-week is up at 840.90, so a pretty significant difference there. And that goes for the indexes as well today, as the S&P 500 on a weekly chart. You can see there's a air pocket between it and the 50-day moving average, but if you look on the weekly, it almost touched, came within 0.1% of the 10-week moving average. So what stood out today? Well, I've been talking about how some retail things are not acting well, but I want to point out one that is, and that's Chipotle. You can see the relative strength line hitting a new high here ahead of price. That's got the 50-for-1 split pending. I'm not sure on the date of that, but hasn't even touched the 21-day, and that's an exception. A lot of the restaurant stocks have been weak, like Kava yesterday, but not today. As it got an upgrade, it bounced nicely off the 50-day moving average. But take a look at Deckers. I mentioned that retail was one of the sectors that was down. This has just completely come apart now after trending nicely above the 21-day for a number of months. What else stood out today to the upside? Axon. Maybe people are preparing, maybe the law enforcement's preparing for the riots that are going to happen once the election comes this way, but a nice move on volume off of the stacked moving averages. This is kind of what we were looking to happen with net, but we didn't get it with the 8 and the 21 stacked up there. But a nice move off of it for Axon. Nutanix has continued to act very well, bouncing at the 21-day moving average today. CEG, another one that we've got our eye on that's very strong, closing positive on the day and bouncing near the 21-day moving average. Something that we've been watching but didn't do very well today, and that is WIN, WINN. This has been on our close watch list. Did bounce at the 21-day moving average, but down over 2% on the day. Let's see what else we got that jumps out at us here. Let's take a look at Airbnb. How did that do today? Down 1.4%, and it's below the now declining 21-day moving average. That's going to wrap it. As always, like to hear from you. The email's don@revereasset.com. The phone's 855-REAL-WEALTH. That's 855-732-5932. If you're interested in becoming a client, email my partner, Dan Stewart. That's dan@revereasset.com. Revere Asset Management, registered investment advisor, separate accounts. We're not a mutual fund or a hedge fund. We are a registered investment advisor. Everybody gets their separate account. You can log into Charles Schwab and look at what's going on there at any time. And we certainly pride ourselves on being different from the traditional advisor that's not even thinking about taking any action in a market that's pulling back and weakening. If you were heavy in small caps today, you really took it on the chin. But we don't diversify into lagging sectors. That's called diversification. Not going to see that from us. And here's a number of bullet points here that we feel gives us a leg up on the traditional advisor. As William O'Neill said, anybody can get you in. Who's going to get you out? GROTECTION has a dual mandate. That is grow stocks in uptrends, take a little off when you start going sideways. You've seen us doing that over the last couple of weeks, and get out of the way during downtrends. We dodged the COVID bear market. This was the first one where we got out of the way. Back here was 2018. That was the taper tantrum where the market was convinced the Fed was offside. And this is just a matter of following rules. And look at this black line here. That's the 200-day moving average. The market never gets in to serious trouble unless that point is breached. We'll lighten up ahead of breaking that, of course. But once it breaks there, that's where all severe bear markets occur. And if you're interested in this approach, by all means, reach out to us. That's going to wrap it for Wednesday, April 10th. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening and have a great day.